Welcome back, investors, to Ticker Time News. I'm Adam, and the S&P 500 rose 1.2% today in an awesome day in the market. And I have to point out on the stock chart, we had this yellow box here for months now, right? This was the resistance area. And what happened today with the S&P 500 on this chart? Let me blow it up a little bit so you can see this more clearly. Instead of meeting resistance and getting stopped like it had been rejected back here on this same line on February the 9th and on February the 2nd, no. There was no stopping it this time. It gapped up over resistance and kept climbing all day long. Now, we didn't end at session highs, but we came close. If we go in and look at the 5-minute chart here for the S&P 500, you can see that gap up this morning right over resistance, but something key happened today on the 5-minute chart with the resistance that we just completely skipped over in the after hours. We came back down to this line at 10:10 this morning, that resistance line, and we tested it, right? Are we going to sink back below that resistance line? No, we found support at resistance. And then again, right here at 12:35-ish, around that time, we tested that again. And did we find resistance? Did we sink back below that and not get back above it? No, we bounced off of that line. And then again, right here at about 1:05 p.m. Eastern, did we sink back below it? No, we bounced off of that resistance line, making this old resistance now support. We bounced off of it 3 different times today after gapping up above it overnight and in early session trading before the market opened, a beautiful gap up. And then 3 different times we retested and we found support. So, ladies and gentlemen, the S&P 500, what did I say? If we broke through this resistance, where did I say we would go next? To all-time highs. That's where we're headed. All-time highs is where the S&P 500 is headed. Now, I put a new yellow box up here at the very top. This is now, let's get it out of there. This is now our target. This is where the S&P 500 is going next. And I believe it's going to 4,800 and above. Because remember, our old all-time high for the S&P 500 is at 4818. So 4818, we get above it, we set a new all-time high. That's exactly where the S&P 500 is headed. I don't know if it can keep up this momentum of, look at how many sessions here. Let's count them. 1, 2, 3, 4 sessions, and then we get a flat day, we get a green day, then a red day, and then another, boom, 1, 2, 3, 4 with a huge gap up. I don't know if we can continue moving that fast to 4,800 or 4,818 to get a new all-time high, but I think we're going to be moving pretty quickly. And I do believe that's where the S&P 500 is headed next. Now, volume today, it had been slowing. Let's adjust this a little bit so we can see it better. Volume, which is down here, volume had been declining until today. Today, that changed. Volume actually increased instead of continuing to decrease as we moved along in time. Each day, volume got shorter, and or volume was less and less and less, and then we get to today, and volume shot back up again. Now, on the RSI down here, we are getting to a top. We're not at the top we were at here. Let me back up to right here. This was November the 8th, 2021. It's when we made a new all-time high. The RSI at that moment was an 83.0. Right now, the RSI is at a 68.7. So there is still room on the RSI to move up. Now, if we look at the money flow index down here, there's also still room. We go back to that same time period when we got a sell signal back here, November. I guess this started on November 2nd, and went to November the 9th is when we reached that all-time high there. We got a sell signal because the money flows got all the way up to a 92. Right now, money flows are at a 72. So again, there is still room for both RSI and money flow and volume to increase to accelerate our move all the way up to a new all-time high on the S&P 500. Okay, there's my technical analysis on that. Why did the S&P 500 rise like this? Well, the reported progress of peace talks in eastern Ukraine that helped to keep the momentum intact, despite a very key inversion in the Treasury market. And I want to talk about that in just a moment because that's critical for the future of the stock market. Now, the Nasdaq jumped 1.8% today. The Dow Jones, it popped 1%. But the absolute star of the day was the small cap Russell 2000 soaring 2.7%. Completely kicked it out of the park. Now, the positive start was kicked off by, of course, the news that Russia agreed to reduce military operations near Kyiv and that it was willing to speed up its time frame for a meeting, an actual meeting between Presidents Putin and Zelensky. Trust but verify, as Reagan used to say. So the Western leaders were a little more skeptical on it. Mr. Biden today is saying that they were going to take a wait-and-see approach on what Russia did instead of believing his words outright. Now, the stock market today took the report at face value, using the news as a very good excuse to maintain its rebound-minded intentions. Apple, ticker symbol AAPL. Look at the chart for Apple. It looks like the S&P 500, only better with no red days. Apple was up 1.91% today. But the cool thing about Apple is Apple has risen now for 11 sessions in a row. 11, look at that. All 11 green candles in a row, 2 gap ups, one back here at the beginning on March 16th, and then today, right? Beautiful. 11 green days in a row. Can you imagine that? If you're holding Apple, I'm sure you can imagine it because you're feeling it. Now, Apple, when we get up here to $182, $183, that's where Apple is headed, okay? I think Apple is going for $185 in the near term. So that's another $7 or so on top of where Apple is right now. And that would be a new all-time high for Apple. Now, the 10 of the 11 S&P 500 sectors did finish in positive territory today. The information technology sector up 2.1% and consumer discretionary up 1.5% were among the sectors that were top performing today, but they were behind the top sector, real estate. Real estate was up 2.9% today, while the energy sector, which has been the star for weeks now, it has turned negative and was down 0.4% negative today. And that bucked the positive trend amid a decline in oil prices by 2% to $104 a barrel. Now, elsewhere, a widely followed recession indicator in the Treasury market briefly flashed red for the first time since 2019. Now, specifically, the 2-year yield, and you can get to that on TradingView, and there is a link in the description for a free account to TradingView by typing in US02, right? And then you type in Y, and you have the United States 2-year government bond yield. Click on that. That's going to give you the 2-year yield. It was up today 1 basis point to 2.35% at the close. It's up a little bit higher than that now in after hours, 2.37. And you can see it. It's just been on a march straight up. To get to the 10-year, basically the same thing. US 10 for 10, and then Y for yield. And then you have a couple of different sources here. Use the TVC on TradingView. This is the bond, and you can see that also rose. Now, the 2-year today, and this is the big deal. This is why we had an inversion of yields today. The 2-year, briefly today, traded higher than the 10-year, which is the 2-year is a shorter term bond, the 10-year is a longer term bond. The 10-year dropped 8 basis points today to 2.4%. You can see it's dropped a little bit further right now. It's at 2.398%. Now, this is typically viewed as a harbinger for a recession between 6 to 24 months after the inversion occurred. So the inversion occurred today. The yields inverted. Does that mean in 6 to 24 months, we are headed straight for a recession? That a recession right now is inevitable. We're going to a recession because the yield curves inverted today. The 2-year was better than the 10-year. That's something we have to consider. Now, bullish investors noted that equities tend to rally, and this is good for the S&P 500, for large cap, small cap, for the broad indices. They believe that the equities will rally in the months between the inversion date and the date of the recession. But then once the recession hits, that's when the markets take their biggest hit. So others out in the market, they downplayed the significance of the indicator today, arguing that the Fed's policy accommodation has distorted the long end of the curve. I disagree with that. Now, the Philadelphia Fed president, he told CNBC today that an inversion of the yield curve has mixed evidence regarding recession indicators. But former New York Fed president wrote an opinion piece in Bloomberg that a recession is, quote, virtually inevitable because the Fed is behind the curve. And that's what I believe. So what do you think? Are we 6 to 24 months away from a recession? Only time will tell. One more item on the recession talk. If you want to track the 210 and the yield curve, you can do that on TradingView. You type in US 10Y, which gives you the 10-year yield. So US 10Y, okay? And then you want to hit the minus sign because you're going to minus out the 2-year. And then you go US02Y. That gives you the 2-year. So now you're subtracting the 2-year from the 10-year. That gives you the yield curve on TradingView. You can chart it out. You can see there has been, and if I draw it from January the 10th down to where we are now, there is a very defined resistance line here, keeping this thing from coming up. But you can see the accelerated move today of the yield curve just completely flattening and inverting. All right, Bitcoin today, it did exactly what I said it would do. BTC USD, it's using its 200-day moving average as resistance. And let's blow that up here a little bit. Yesterday, its candle wick went right up to that 200-day and got rejected. Today, same thing occurred. So the Bitcoin is being rejected at its 200-day moving average, which isn't bad. You know, it's been on a solid run since its bottom here on March 14th. But really, the turnaround for Bitcoin actually occurred right here above my head. That's how far back Bitcoin was. And what's that date? I can't see it. I'm in the way. January the 22nd. That was the turnaround point for Bitcoin. And it's probably going to use this trend line that you see that's coming up here, this ascending trend line, and the 200-day moving average. And it's most likely going to create this wedge right here, like this, and then like this, a wedge pattern. And then, you know, it's either going to shoot up or get rejected from that. So usually when you're in a rally, you enter the wedge. It usually continues the rally. It's a continuation pattern, but it doesn't necessarily have to follow those rules. But that's where Bitcoin is at right now. All right, Ethereum, ETHUSD, here on TradingView, and exact same thing. It is finding resistance right here at its 200-day moving average. and keeping it from going any higher. Now, it also has a trend line here. I need to extend this trend line out a little bit further here. So it's going to end up with the same type of pattern here, where we could get, a wedge pattern going if it follows the 200-day, something like this. That could be a possibility for Ethereum. And then since it's been in a rally, it trades sideways for a while, and then it comes out of this wedge pattern and goes up even further. So that's an example there of what's happening with Ethereum and Bitcoin. And again, 200-day moving average is the resistance that both of them are finding. And I think they're going to trade sideways for a little bit. Okay, here's where we stand year to date, and we actually have a change of leadership for the first time this year. The S&P 500 is now in the lead, down only 2.8% year to date. The Dow Jones, it is down 2.9%, so very close year to date. The Russell 2000 made a big comeback today. It is down 5% year to date, and the Nasdaq is down 6.6% year to date. Okay, I want to really quick touch on Lovesac. Ticker symbol is LOVE, LOVE. Lovesac was sharing the love today. They popped 20.8%, a big, huge beat on earnings. They actually beat their Q4 EPS by a whopping $1.45 per share on revenue of $196.2 million, or a 51.3% year-over-year gain, and that beat by $21.8 million. A huge beat. Now, sales were up 51% for the quarter, largely due to a higher sales volume and lower promotional discounting. So they were selling their goods for full price, and they had big volumes on that. Now, gross profit was up 46% during the quarter. Also, operating expenses did rise by 6% during the quarter to help take down the gross margin rate from 57.9% to 55.9%. All right, smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. Thank you, ladies and gentlemen, for watching, and I'll see you in the next video.